Hello. On behalf of Haitong Securities, I would like to welcome Dr. Anil Pant, MD and CEO of Aptech. Along with sir, we also have Dr. Anuj Kakkad, President and Executive Director, heading the global retail business, Mr. T.K. Ravi Shankar, EVP and CFO, and Mr. Saurabh Gada, Consultant Investor Relations. At the outset, I would like to wish you all a very happy new year 2022 and pray that the problems of the past 2 years finally are behind us this year. Now, I would like to request Dr. Pant to kindly take us through the company in detail and the Q3 performance, sir. Over to you.
Thanks, Siddharth. I'm just going to take 2 minutes to talk you through what we've done, and then we'll get into the numbers and what's happened in Q3. So Q3 for us has been very satisfying. It's one of the best quarters ever in terms of revenue and bottom line on an overall basis. The significant highlights of quarter 3, if I may, about 3 or 4 of them. One is that the booking in our booking, which is a lead indicator in our retail business, has almost come back to pre-COVID levels, which is a incredibly, I should say, satisfying moment for us. As a result of this improved performance in booking, the company has added significantly in terms of manpower, so much so that we've added 64 people in Q3. And there are some costs that we have increased in quarter 3 in anticipation for, much better numbers in maybe Q4, or to be more realistic, Q1 onwards. Significant increase in cost in marketing, significant increase in cost in terms of manpower. We've done exceedingly well in the enterprise business, which is shown as a discontinued business, so much so that the strategic committee of Aptech has recommended to the board that we should relook at reinstating it as a continuing business instead of divesting it. And there are some significant achievements.
Can I request other participants to please mute yourself when Dr. Pant is talking? Thank you.
So there have been some significant achievements in the enterprise business. One of India's most complicated exams, almost about 12 lakh candidates across 300 plus cities, involving more than 600 test centers and simultaneous rendering of 36 subjects at any given point of time, was carried out by the enterprise division. And the numbers posted by the enterprise business in quarter 3 are probably best in the history of that business. And they've got a very, very strong order book going forward. I mean, a lot of people have asked me about, whether these performances are sustainable. And all I say is that we're quietly confident that as an organization, the worst is behind us. The digital pivot that the company has made in the last 2 years has led to a never before kind of engagement with the students. Student engagement is at its all-time highest. Placements are at their all-time best. And with the business climate improving, we're very hopeful that as we move forward, these numbers will keep reflecting in our performance. We've also initiated a significant accounting change, which our Chief Financial Officer will talk about. We've moved into the accrual system of accounting, and the objective of doing this is very simple. There are 4 or 5 extremely important things which happen with this. It gives us better control on the network. There is a much higher level of engagement with the student. The academic delivery is better controlled. Learning outcome for students is better. Defaults are much lesser. And the most important thing, people used to always ask me about the seasonality of business. the moment we move into a complete accrual kind of accounting, people will be able to appreciate the true size of Aptech. Also, the seasonal nature of the business will get addressed. So traditionally for us, Q2 has been our best quarter, followed by Q1, Q3 and Q4 respectively. But by moving into this standard of accounting, over the next 4 to 6 quarters, we'll find that the entire revenue and profitability curve gets smoothened out. So it's good for the students, good for the organization, and it leads to more predictable business, more predictability for investors. So I think it's a good thing that we are doing. Without further ado, I will ask my team to take you through the numbers, and we are happy to answer any questions that people may have. Saurabh, over to you. Saurabh, you're muted.
Thank you very much, Anil. Welcome everyone to our quarterly conference call. And as Siddharth wished, Happy New Year to you guys again. I will quickly take you through the quarterly numbers, right? So as Anil said, we have done exceedingly well in terms of the overall business in the current quarter. So last quarter also, we had done the highest ever PBT in more than a decade, quarterly PBT. And this quarter we have surpassed that number. So last quarter we had done 15.7 crores versus that in this quarter we have done a PBT of 17.6 crores on an overall basis. The revenue also has, it's again, the highest in the last more than a decade in terms of the quarterly numbers, right? So where overall revenue grew by 120%, within which the global retail revenue went up by 44%. And the enterprise business revenue was actually 4 times of the number that we did in Q3 FY21. On the cash flow side also, we have done very well because the continuing business has been churning out cash, and for the 9-month period, we've generated almost 19 crores of cash from operations in the continuing business. So these are the key highlights in terms of the numbers. So this, I've covered the main thing that we've almost touched 80 crores of operating revenue in Q3, which includes 42 crores from the enterprise business and 37 crores from the global retail business, as against 36 crore total revenue in Q3 FY21. As Anil mentioned, yes, there are some cost increases, specifically in employee expenses. If you see, there is a 27% jump. That's because we've added more people, and we've also restored and salaries that were reduced during the pandemic and given hikes on top of that. Based on the change in the accounting, there is some increase in other expenses, and we've also had increase related to marketing in other expenses. And why you see 247% increase is primarily because of the enterprise business going up almost 300%. Right? The execution cost is captured in the other expenses. Depreciation is in control. So net, if you look at the PBT, so we've almost doubled the PBT from 880 lakhs to 1758. So this is P&L on a combined basis. Specifically for the enterprise business, these are the numbers. And as Anil has already covered, this is the best ever performance in the history of this business that we have done. And overall, the margins are also quite healthy. So at the PBT level, we are almost touching 25% PBT, so which is very good. And given the prospects and the performance turnaround that we've seen in the last 2 quarters, is the reason why the strategy committee has placed its recommendation before the board to reconsider reinstating the enterprise business as continuing. This is the global retail number, and here is where, if you see, on the revenue front, we've done very well, And that's again, because of the fact that our bookings and collections have been better. And at the same time, while the margins have come down, there are very good reasons for that, which I will cover in subsequent slides. So first reason that I would like to highlight is the fact that we have done a change in the commercial arrangement with the network, that is with the business partners, right? So in the new system, the student will be invoiced directly by Aptech, right? So this change we have started from April 1 for all domestic retail brands except preschool, but this will happen in phases where we gradually migrate all our centers to this new structure. And if from the date that this migration happens, the students who have enrolled before that migration date will continue to be, the revenue recognition for those students will continue to be as per the old policy. Whereas for the students who will enroll on or after that migration date, the accounting policy will be different. Now, what is this difference? I'll explain that very in a nutshell. So, in the old system, which was the royalty income that we used to recognize, we used to recognize only the net share of Aptech. So, out of 100 rupees, if Aptech's share was 27 and the business partner's share was 73, our revenue was only 27, and we did not recognize the entire 100 as a revenue. Whereas going forward, we will recognize 100 as the revenue and 73 as the cost, right? This is in terms of the span of revenue recognition. So in the old policy, it was only the net share. In the new policy, it is the gross student fees that will be recognized as the revenue. But at the same time, there will be a cost related to the business partner's share. Now, again, there is one more difference, which is the basis of revenue recognition. In the old policy, we used to recognize our revenue when the money was collected at the center by the business partner, right, for different components. Whereas in the new policy, it is based on accrual over the period of delivery of the course, which is for the course fee. There are other components which will have slightly different recognition method, but largely what is going to be the major component is the course fee, and that is going to be recognized on the basis of delivery percentage completion. But the key thing to note is that over the student's life cycle, the total, the net profit of Aptech remains the same for that student. It does not change. Okay, and the cash flow, there is no change. The cash flow continues as it used to be before. The only thing is we'll have a greater control on the collection versus the previous commercial arrangement. Just to illustrate this change for a student over the life cycle, we have given this slide in the presentation, and this will give you an idea for a typical student how the two methods will differ. And here I'd just like to highlight that there may be a timing difference in terms of the capturing of the profit, right? Apart from the change in the revenue and the cost numbers, right? So in the old model, depending upon how the collection is happening, whether it is more front-loaded or evenly spread out. So assuming it is more front-loaded, which typically used to be the case, like it is in this particular example, if you see in the first 3 quarters, we have recognized 75% of the overall profit from that student, whereas in case of the new model, it is only 58.3. Now, in the current quarter, this timing difference has led to a difference in the profit for the income stream that we have got from this new accounting policy. So out of that 37 plus crore of operating revenue, 6.5 crore is from this student delivery income under the new policy, whereas the rest of 31 crores is as per the old policy. Now, just to give you an idea of how do you compare them with the previous year same quarter, right? So we have given the numbers. So if we were to recognize the business corresponding to this student delivery income as per the old policy, our revenue would be 3 crore 61 lakhs, right, for the quarter. And what will be that number for the year is 5.75 crores for YTD FY22. So basically there is an income addition because we are grossing the income of 2.85 crores. But against this 6.46 crores of student delivery income, there is also the expense related to the franchise, the business partner share, which is 4.37 crores. So net, the whatever profit we have done is actually less by 1.16 crore versus what we would have done as per the old policy. And again, this is, as I explained in the previous example of a student, this is purely a timing difference in terms of when the profit is going to get accrued, right? So over a period, this difference will go away for a particular student. So, but in this quarter, there is an impact of 1.16 crores. So if we were to report on the basis of the previous policy, our PBT for the continuing business would have been 8.7 crores against 9 crores. So, almost flat. Now, what are the other reasons, that kind of account for slightly lower profitability vis-a-vis the previous year is, these are the major reasons. And say, for example, one of the reasons is that in December quarter of last year, we didn't have any significant expenses related to Pro Alley, whereas in the current quarter, almost 1 crore has been spent on Pro Alley. So if we were to add it back to the profitability, to the PBT, our PBT would have been roughly 8 to 9% higher than the previous year's same quarter. In addition, as Anil explained before, in anticipation, given the fact that we've done so well in booking and collections this quarter, and in preparation for the season, the major enrollment season in Q1 and Q2 next year, so we've made investments in manpower, right? So plus because the business is doing well, so we've restored the salaries and given increments. So net total expenses, right, towards employment which have gone up, and the marketing spends that we have done over and above the spends that we did last year. Overall expenses are roughly 4.7 crores, and this includes a bit of travel also, which has started again. So this is the additional expenses that we have incurred for the reason that we are slightly slowly and surely but moving towards normalcy. There is another impact related to the change in revenue mix. So Lakme, as you know, is one of our strategic growth brands. So there we have a share that is to be paid to Lakme Unilever. So overall change in revenue mix has led to an increase in 1.2 crores in the cost. These are the segment numbers. So the global retail segment, the PBT is almost flat, whereas the enterprise business has gone up 57 times. Then corporate overheads have gone up by roughly 1 crore. Again, that is because we are supporting a much larger size of operations now, and the fact that we have given salary increases. So that is the reason why corporate expenses have gone up. As you see here, student collections have gone up 20%. This is the distribution of business between domestic and international. The ratios continue to improve for us. So I will explain the cash flow part in a subsequent slide. But if you see the quarterly return on equity, 7% as against 2.8 in Q3 FY21. So overall, the things are moving in the right direction for us across all parameters. So cash flow, as I said, initially, so we have done 19 crores almost, in terms of cash flow from operations in the continuing business, the retail business. Why the enterprise business has a negative cash flow is because there was a lot of work in progress work which is recognized in terms of revenue, in terms of the percentage completion about them, but which will get billed and collected over a period. So it is negative for now, but this collection will happen going forward. And we paid roughly 9 crores as dividend in the Q1 of this year. So overall, there is a reduction, but these are the reasons. These are some of the key operational highlights. Right, we've added 21 centers in Q3 FY22. The numbers for our CryoSoul platform are growing. Then our enrollments have gone up, as I mentioned before. The bookings are higher, right? And while there is an impact that is there from the Omicron wave, which started from mid of December, but things overall for the quarter were much better. Our top 3 markets in international retail are also doing well, even though Vietnam, there was a significant impact of the third wave. This is one thing which I would like to really highlight in terms of the kind of impact we are having, and in turn our students are having on the world of media entertainment today. So of the 10 films that were nominated for Oscar in the visual effects category, we have 49 MAC students who have worked on these films. So these are our alumni who are making sure that MAC is known for giving industry students who can do award-worthy work. And this is not just MAC, but even there are many arena students who are working for the studios and who have worked on these films, which have been nominated for Oscar.
Can you just stay here for a moment?
Yes,
overall, it is more than 100 students between Arena and MAC. And what is significant is that each one of the 10 movies has a few students from either Arena or MAC working in them. So you can say whichever movie wins the Oscar, you will find that Aptech students are part of that particular movie. So it's not even, it's like 100% surety of some or the other student being part of the Oscar story.
Right, Anil. Yeah, and we've done a lot of significant marketing activities also during the quarter. So Arena celebrated its 25th anniversary in Q3 of last year, and we've done a campaign around that. And there is a video in the presentation which you can have a look at. Then because you remember Anil mentioned that there is a lot more student engagement that is happening because of our digital pivot. And one of the exemplars of that is, one of the creative competitions that we organized in Q3 in MAC, which is the MAC Creative Week, right? So as against some 6,000 plus students that participated last year, we had almost double the numbers this year. So this is one of the results and outcome of the digital pivot that we have done. The job openings and placements that we have done are at a record level as compared to previous years. And another mention that I'd like to make is of a student, a 7th grade student that we trained in our Aptech Learning brand, who bagged the silver medal at the Maharashtra State Skills Competition in the web technologies category, and this will make him eligible to participate in the World Skills Competition. So this is a significant achievement from an Aptech student. In the past, also our students have won silver and gold not only at the India level but also at the international level.
What is noteworthy here is that in this competition you have typically engineering students who are participating, and there is a 10th grade kid who has participated in this and scored the silver. So matter of great pride for us.
True, Anil. That's true. So, just to wind up, I'll play this film, which basically, will tell you about the impact that our brands are having. Yeah, just give me a second.
तू न थकेगा कभी, तू न थमेगा कभी, तू न मुड़ेगा कभी, कर शपथ, कर शपथ, कर शपथ, अग्निपथ। ये पंक्तियां श्री हरिवंश राय बच्चन जी की कविता से हैं और बहुत खूबसूरती से बताती हैं कि ऊपर वाला आपके रास्ते में मुश्किलें रोकने के लिए नहीं बल्कि आपको परखने के लिए देता है। ऐसी ही एक दिलचस्प कहानी है मुंबई के हितेश पाटिल की। हितेश के पापा रिक्शा चलाते थे और माँ घर का काम संभालती थी।
घर की परिस्थिति को देखते हुए मैं अपने पापा का हाथ बटाना चाहता था और उसी समय मेरे दोस्त के साथ में अरीना एनिमेशन के सेमिनार में गए और मेरी लाईफ में एक नया मोड आहे।
सेमिनारवरून आल्यानंतर रितेश खूप खुश होता, पण मला याबद्दल काहीच माहिती नव्हतं, म्हणून मी त्याच्या वडिलांशी बोलणं केलं.
मी रिक्षा चालवणारा माणूस, मला याबद्दल काय माहिती. आम्ही दुसऱ्या दिवशी अर्ध्यावेळानं फोन केला आणि ते जाण्याचा निर्णय घेतला.
मम्मी पापा रेडी तो हुए, लेकिन सबसे बड़ी प्रॉब्लम थी फीस की.
रिक्षा चालवून पैसे तरी किती मिळायचे, त्यात मुलांचं शिक्षण करायचं, फी भरायची. मग त्याच्या वडिलांनी ओव्हर टाईम करायचं ठरवला. जर रितेश कोर्स करून कामाला लागला तर भविष्य आमचं नक्की बदलेल हे आम्हाला असं होतं.
एडमिशन हो गया और बहुत कुछ सीखने को मिला. घर की परिस्थिति को देखते हुए मैं अपने पापा को हेल्प करना चाहता था और उसी दौरान अरीना वालों ने मेरे को पार्ट टाइम जॉब करने की सलाह दी. 6 महीने के प्रैक्टिकल ट्रेनिंग से मेरे को 12,000 की नौकरी मिली एज ए ग्राफिक डिजाइनर. यकीन नहीं होता. तभी मैंने सोच लिया था इसी फील्ड में आगे बढ़ना.
त्याला दोन्ही गोष्टी सोप्या नव्हत्या, तरी त्यांनी करून दाखवलं.
आज मी जेव्हा त्याला स्वतःच्या कंपनीत काम करताना बघते तेव्हा माझं मन भरून येते.
मैंने पार्ट टाइम जॉब करते हुए अपना कोर्स भी कंप्लीट किया. आज मैं अपने खुद की स्टूडियो में स्टूडेंट को काम भी देता हूँ और उनको मोटिवेट भी करता हूँ. और इनमें से कुछ अरीना के स्टूडेंट्स भी हैं. उन्हें देखकर मुझे मेरे पुराने दिन याद आते हैं और मेरी कोशिश यही रहेगी कि स्टूडेंट्स अपने करियर में आगे बढ़े.
इन 25 सालों में हमने हितेश जैसी कई जिंदगियों को बनते देखा है और कामयाब होते हुए भी देखा है.
So that was a story of Hitesh, who rose from a very poor background and is doing so well for himself now. So we've done a lot of other marketing activities in our Aptech Learning, Aptech Aviation brand, and in Pro Rally, in Mac, and there is a lot of student engagement and digital marketing that is happening, and we are very confident of doing well going forward. I mean, I am done. The
If you, Saurabh, Anuj here.
Yeah.
You know, I think it is important for the investor community also to understand how the digital pivot that we have done is impacting positively the overall way communication is happening and the level of engagement. I think it needs to be understood to be able to, you know, for them to be able to think through as to what kind of an impact this can have on business in the future. Just to give you an example, over the pandemic period, we have conducted in excess of 700 student engagement exercises, okay, across our brands. Now, if I were to benchmark this against the pre-COVID times, you know, the number would be sub 100 because there are inherent constraints in doing things physically. So the acceptability among the students and people at large, or the population at large, to digital communication has been capitalized on us to deliver very effective communication. Now, what I mean by effective communication, see, we are a job-oriented brand, and our engagement with the industry is the key to our success, and that is reflected in our studios and the Oscar-worthy students that you saw. Now, to be able to get this, what we teach in the class is only one thing. What we teach through Creosols is another thing. What we teach through other online working platforms is another thing. What we teach through our projects and practicals is yet another thing. What we teach through conduction of events which are not mere competitions, it's actually getting the students prepared for the real life of working. It is yet another thing. And last but not the least is where they communicate directly with the industry. Now, it is a person, let's say, who's the head of a studio will, with great reluctance come to one of my seminars in Delhi and Bombay, and really he has no time to go to any other place. But today I'm able to expose him to the entire student community, and therefore they get the benefit of this directly. So ours is not very often I'm asked this question, particularly from lay journalists, that, oh, Edtech, and how does your model get impacted? Now it's Edtech all the way. So, the standard stock reply that we have for that is that the issue of Edtech is different. The issue of job enablement is very different. Job enablement is the pedagogy for job enablement is a 360-degree approach. And without that, it's not easy to get jobs, at least not jobs which will take you up to the Oscars. So this pedagogy has been greatly helped by the change in student behavior, our own abilities to communicate, both in the academic sense of the term as well as the marketing sense of the term. Back to you, sir.
Yeah. Thanks a lot, Anuj. I think that's a very important point. And with this, we've covered the update for the quarter, and we can now open for questions, Siddharth.
Yeah. Thank you. Thank you very much, Dr. Pant, Dr. Kakkar, and Saurabh for a wonderful introduction on the company and the results and the changes in policies. Since it's a open session for all investors, you could just unmute yourself and ask the question to the management directly. I would request you that since most of the people on the call have not put in their full name and company name, if you could just announce or introduce yourself. I'm not talking about the management, I'm talking about only the participants. So if you could kindly introduce yourself and begin your question. Yeah,
can I ask the question?
Yeah, please. If you
My name is Jinesh Joshi. I'm from Prabhudas Leeladhar.
Sure, Jinesh, please go ahead.
Yeah. Sir, my question is with respect to this change in accounting policy. If I'm not mistaken, Aptech's share in collection by franchisee is roughly 26% in domestic markets and approximately 20% in international markets. So now with this entire share of 100 rupees, which was kind of highlighted in the example which Saurabh gave, now that entire component will be recognized as a revenue rather than our share itself. So what has prompted this change? Because this is just a change in the way will reflect our financials, but the impact on profit is negligible, and also the cash flow, there is no impact. So it essentially gives us an artificial size advantage. So what has prompted this change?
Well, Ravi Shankar this side, the CFO of the company, it is not to artificially increase the top line of the company that we had resorted to this. Essentially, if you see over the period of time, the company's network centers got expanded from about 500 to now about 800 plus. Now, given this increasing size of the network and the need for compliance all across, whether it is in terms of law as also in terms of the monies which are collected from the students in various forms, the fact that Anuj mentioned that the digital pivot has now come to stay. Obviously, a good part of the collections are also through the digital mode, and the online transfer of monies from the student directly to the company is facilitated. Having said that, then obviously the first thing that happens is there is a complete uniformity in the delivery of education from the company to the students across the centers as compared to a franchisee doing it in bits and pieces. That is the first one. The second thing is, as far as the compliance is concerned in terms of GST law, there's been here and there an issue for us. That is also ensured that there is absolutely no issue whatsoever when the company does the GST compliance en bloc for the entire network centers. Third is the fact that we have now accrued about 8.5 crores of income in the 3-quarter period, as was indicated by Saurabh in his presentation. There would not be a single rupee of a receivable in terms of debtors, and therefore the possibility of delinquency would be practically zero in this case. So these are some of the distinct advantages, apart from the fact that you need to own the network for a sizable company. And going forward, this is what we want to establish, both in terms of quality, uniformity in approach, and the ownership of the network that the company has.
Okay, sir. But at the end of the day, our share remains intact, right? I mean, what do...
Jinesh, let me also add one more point. See, one of the questions, I actually covered this during my preamble, but one of the important things that this is going to do is it is going to ensure zero delinquency, and it will even out the business cycle. So, you will not see those peaks and troughs which used to happen in terms of profitability or top line. Accrual is a much more refined method of ensuring that you don't have those peaks and troughs in terms of top line and bottom line. So it's always for a business to be on this model, right? So while Ravi explained to you the financial part of it, also from an investor perspective, a lot of people ask me, why are your numbers so different across quarters? So the objective is that once over the next 4 or 6 quarters, everybody comes onto this method of accounting, the top line and the bottom line will be in line with the student delivery, and it will be even across months, across quarters.
Sure, sir. Thank you so much. One follow-up from my side. With respect to this enterprise business, over the last 2 quarters, it has done exceptionally well, and now we are reconsidering to not show it as a discontinued operation. What exactly has changed? I mean, can you highlight, and how sustainable is this trend? Sir, you are on mute.
So there are 2 things which have happened. One, the technology stack today, as we speak, it's been benchmarked, tested, and evaluated by some of the country's best experts. And it's been rated number 1 in at least 4 of the tenders that we participated in. The second important thing that has happened is in this technology stack, the ability to assess a student is not just on multiple choice questions. There are about 10 distinct question types which have been brought into this, including video-based questions, right? So a combination of all this has led to us winning some sustainable orders to the extent of about 100+ crores a year. And the break even on this business happens at about between 56 and 60 crores. So the moment you got 100+ crores of revenue, the remaining part of it is pure bottom line. So this business is not going to bleed the way it did earlier. These are 3-year, 5-year, 3-year renewable, extendable by another 2-year kind of contracts. And the fact that in the last 2.5 years of business, there has not been a single bad delivery. The fact that collections have been more or less in line with the revenues that we have generated. So the board felt, the strategy committee felt that didn't make sense to put it on the market for what we were getting. And they have recommended to the board that we continue it as a continued business.
Sure, sir. And this 100 crores of orders which you highlighted, I mean, what is the visibility? I mean, this might be, is it a recurring thing?
Yeah, yes. That's why I said 3 to 5 year contracts. 3 to 5 year contracts, Jinesh. We know,
Okay, sir.
which quarter. See, I mean, for this 100 crore, we have visibility quarter-wise. That it will happen in Q1, Q2, Q3, Q4.
Okay, sir. Thank you so much.
Yeah.
Yeah, you can ask
Yeah, hi,
the question.
this is Ashwin here from Samatva Investments.
Sorry.
Hello.
Sorry.
Hi, sure.
Yeah, hi, this is Ashwin from Samatva Investments.
Yeah, sure.
Go ahead, Ashwin.
Yeah, hi. Yeah, so I get a query on the institutional business. So right now we have won a big order and the numbers are coming in. That is clear. But is it a function of not getting a good price for the business, or because I remember one of the reasons that was given for not wanting to continue the business on the institution side was the very nature of the business in terms of dealing with government agencies and the whole thing. So that won't change, right? So I'm just trying to understand why the sudden shift. Is it only because we won the order and now it is sustainable, or what else has changed apart from the sales that is coming in?
So, Ashwin, there are two things in this. This business had been de-risked in the sense that we were not going too much behind state government business, which was risky. So today, the kind of customers who are on board are institutes of national importance, central government PSUs, central government testing agencies, where the money is safe. You don't have to worry about getting your money. It comes in within 90 to 120 days. Now, once the team was able to demonstrate that to the board and deliver well and get the technology stack certified by experts, that this is going to, I mean, at least as we speak, there are no dangers in terms of this tech stack being hacked or, question paper leakages, etc. The board felt that the business has got de-risked, the margins are good, you've got long-term contracts, therefore it makes sense to continue it. And obviously, we had indicated that there were certain prices that we wanted. And I did say that we were not able to get the right kind of buyer for this business. So obviously, it doesn't make sense to sort of let go of a business which is doing well and not realize value. That is equally not fair to the shareholders. So we've decided that we will make a go with this business. The strategic committee has recommended it to the board. The board has asked for some more documentation, which will be presented in its next meeting, and they will take an appropriate call there.
But say at some point in the next 1-2 years, if you get a good enough price for the business, will this be let go? In case at a price that you like?
That's a thing of the future, Ashwin. I mean, today, I'm stating things the way they are today. Today, this business, and all along, even in my TV interviews, I've maintained that this business was never a bad business. On the front of technology, it is one of the most impressive pieces of technology that exists anywhere in the world today. And the only reason we wanted to let go of it was that we didn't have the ability to make it profitable. Now the fact that this business is profitable, has demonstrated it for 2 quarters, we have a visibility at least for the next 2 to 3 years, makes sense to continue with it as a going business and see where we go 2 years from now. 2 years from now, somebody comes up with a great offer, that's a call the board will take.
Got it. All right, thank you.
Next question, please.
Hi, this is Apurva here. I'm individual investor.
Yes, sir.
Hello.
Sure, Apurva.
My question is on, so around how much money have been incurred on Pro Ali so far? Wouldn't it be good to show it as a separate company or as an investment? It just drags down the total net profit and margins too.
I understand, Apurva. it's a call that the board has taken, that look, we are not in the valuation game, right? I mean, it's not as if we want to create a unicorn with Pro Alley in the next 6 months. For us, we've maintained that Pro Alley is another good method of delivery for us. We have, online delivery, we have cohort learning, we have in-center learning, and Pro Alley is the fourth delivery method for us, which is self-paced learning. Now, that being the case, the board felt that today the company has the ability to grow this organically, and we have taken that call. If at some point of time we feel that the investment that we need to make in this particular business justifies floating it as a separate company, the board will take a call at that appropriate time. But today, we don't want to get into this space of, creating valuation. We believe that Pro Alley can be a very, very valuable investment for us. So we would rather retain everything ourselves rather than give it away to, people at this point of time.
Okay, thank you.
Next question, please.
Yeah, hi, this is again Ashwin from Samatwa. A quick query on the retail side of the business. Given the bookings that we have seen now, it's starting to note that they come back to the pre-COVID levels. So what kind of numbers should one expect in the next 2 years, broadly, in terms of the revenues that would be a good number to see?
Ashwin, I'll let Anuj answer that question. Anuj Kakkar, who's our global head of the retail business.
See, what we normally prognosticate is in terms of the jobs which are available. As you know, in our major businesses, we are already the leaders by far. In arena, in the media and entertainment business, we are leaders by a very long margin. And even in the beauty business, which is our third biggest business, we are already ahead of so we are the largest in the country today in terms of number of students. So in that kind of strategic scenario, your growth will come from expansion in the number of jobs and in expansion in the market itself. And as not that much by increase in market share. Well, it can happen in the beauty business, certainly. So we have to look at the trends in these fronts. Now let's look at first the media and entertainment business, what's happening. If you see, even during the pandemic period, and certainly that has only accelerated the trend towards production, content generation, which is the content generation is essentially what our students work in a very broad sense of the term. That both in terms of number of jobs and in terms of the number of companies employing our students has been increasing. So, and if you look at all secondary data also, they're all talking in terms of a very, very healthy growth of those industries. Now, overlay this with the new emerging technologies which are coming in. Let's metaverse, for example, and blockchain technologies, NFTs. All these also are potential areas for our students to do the work that they're doing and get employment in those areas. Gaming, of course, is a very big one for us. Currently, gaming is accounting for less than 5% of our employment base. But in the next 3 years, or maybe sooner, 24, 25, 3 years, gaming is projected to be multiple times the number of entire film industry of the world. So, entire film industry of the world in one place will be overshadowed by gaming in a very big way. And that is a very small component of our business currently, as it is for the rest of it. So we will also ride that curve as we go along. That's as far as the thing. So as far as the immediate as well as the medium-term business is concerned, the number of jobs are only going to increase manyfold. And if only we don't even increase market share, even if we maintain our market share, I think we will surpass all the possibility is endless. Even as we speak, forget the future. we have more number of jobs than the number of students that we have for them. So it's a rather good problem to have in one sense of the term, but a bad problem in another sense of the term, because it essentially means that I am underplaying the market. I'm leaving something on the table for somebody else to take. So, which is a potential even in the immediate term from a market perspective. Now, if you look at the beauty business, what's happening on the beauty business, the pandemic has created a trend towards consolidation. Who got impacted the maximum? It's the mom and pop shops, the roadside salons or the neighborhood salons and so on and so forth. So there is a trend towards consolidation. There's a trend towards safety awareness, which is placing organized players at an advantage. And since we are catering more towards the organized players, so there is a natural advantage which will flow on to us. Then there is a direct-to-home services which are becoming very popular, where the beauticians go to the people's homes and deliver the services. So we have started, our students are getting employed in those areas also. So if we look at the macro environment, all the winds which are there are tailwinds. So we really have to do a very, very bad job if we don't grow at an exponential rate. Anil, you have a question?
Yeah, sure. Thank you.
Thank you, Ashwin. Next question, please.
Hi, this is Nitin. I'm an individual investor. Okay. The change of accounting that you have implemented, we see a revenue of almost 38 crores for this quarter. So this has been implemented for this quarter, and are the revenues stated on like-for-like basis to the previous quarter, or is it a methodology that you plan to implement going forward?
Ravi, you want to take this question?
Okay. No, the previous year, last quarter has not been made up like to like, but that would be very, very presumptuous to do. And therefore, this year, this quarter, in fact, we had started it from April onwards, and it has slowly gathered momentum. And so much so we have migrated about 246 centers till now, still about 600 centers to go. So this is likely to take about 18 to 24 months to complete the entire program of migration of all the centers. And you would see that of the 37 crores of top line, about 8.5 crores came from this stream, which is the new stream.
Sorry to interrupt. 6.5 for the quarter.
Yeah, for the quarter. And YTD I'm talking about, it's about 8.5 crores. So for the 9-month period, it's about close to 8.5 crores. And so this will go on increasing, while the other top line in terms of the collection-based royalty income would go on reducing. So that is how it has been envisaged for the company.
Ravi, you might want to elaborate on that. This is for new students.
Absolutely. This is effective 1st of April 2021, and therefore it is only restricted to the centers and the students who have come into the fray of Aptech effective 1st of April 2021. So
and more, Ravi, sorry to interrupt again.
Yeah.
More precisely from the date of migration, not
from the date of migration. Yeah.
Which will be different for each center.
Absolutely. Absolutely. As and when they go into this stream.
Thank you for the clarification. See, I would just try to give my understanding of it, right? What it would typically mean. See, you have implemented the change from 1st of April, right?
Right.
So revenues for this particular quarter, which is stated at around 38 crores,
Right.
it is inflated, or inflated may not be the right word, but it's not a like for like. So the growth that I'm seeing right now is not a growth in the real size of the business, right? So I hope that understanding is right. So if I look at it from that perspective, so what would be the real growth or curve that you have versus last year for the same quarter with retail business?
Just to answer this question, this has also been covered in our results, where we mentioned this in our notes to accounts. Right?
And in the presentation also it is there.
That's
Yeah.
right.
And we intend to be absolutely transparent about this. So if you look even in the presentation that we've made, we've shown what is the increase on account of this. So if you look at 37 crores, I think 6 crores is the accrual that has been taken out of 37. So if you want to know what would have been the number comparable to last year Q3, it would be 37 minus 6 plus whatever share of this 6 crores we have taken in the old stream of things.
Yeah, Anil, which is there, which is 34.4 crores.
Yeah.
It's there in the presentation.
So 34 crores versus 25, 26 crores of last year, right? Is that right?
Correct.
Absolutely.
You also mentioned at some point in time, I think, I'm just digressing from this point, okay. You mentioned the number of centers that you have opened in this quarter, so I just missed out on that number.
21.
21, okay. And what is the visibility that you have in terms of the centers that you'll be opening in the quarters coming forward?
It would be more than this every quarter going forward. Similar numbers.
So where are we standing right now in terms of absolute number of centers at this point in time?
Ravi, Anuj, you want to take that?
Saurabh, you have the number ready with you?
Yeah. Give me a minute. I'll just confirm that number. Yeah.
Okay.
We can proceed to the next question. I'll come back with the answer to Nitin.
The approximate, if it's an approximation that you want, it's about 800 centers globally today, right? And we intend to add at least about 80 to 100 centers every year.
Okay. Thank you. That's all for me. I appreciate it.
We have a next question from Sunny Gosar. Sunny, you can unmute yourself and ask your question.
Yeah, thanks for taking my question. Basically, as the company moves back into profitability and we start seeing positive free cash flow, so what's the capital allocation thought process going forward? Are there any inorganic opportunities that you will look at to deploy this cash? And the second part of the question is basically some of our nascent segments like say aviation and preschool. So where do you see those divisions heading and what are the growth plans there?
Sunny, we'll answer this in two parts. I'll take the first part. Anuj will answer the second part. You're right that look at what's going for us. Okay, we're generating free cash. Probably we'll be at about 40-50 crores a year. Next year it should be significantly higher than this. So there are only three ways to deal with this cash. I mean, if we want to make investors very happy, to me as a CEO, I would like to use this free cash to make inorganic acquisitions and grow the company. But as a listed company, we also have a responsibility to our shareholders. So we have a dividend payout policy. Any money beyond this dividend, we would look at investing in, looking at acquisitions. Now you will appreciate, Sunny, that till now we've been a company which had been making profits in that 18 to 20 crore range and giving out dividends between the 9 to 18 crore range. There was never any cash available for acquisitions. So as this condition keeps improving, we will be on the lookout for inorganic acquisition, and to that effect, we are speaking to our board to sort of build a strategy around that. Does that answer your question on the cash and the plan?
Yes, hardly it does. And basically, are there any focus areas or are key strengths which where the inorganic strategy is more relevant? So what's that?
We would continue. We would look at obviously going at or looking at companies which have a similar philosophy as ours, which is any training which leads to employment. We would not, and this I will be very categorical about, we will not go around looking to buy companies which believe in burning money for customer acquisition. We will look at companies which are small in size and which can, with our help, scale to global size, because we are present in about 30 odd countries. We will look at companies which are in the space of creating employment as an end result, and of course, in the white collar space. I mean, we're very clear about where we want to be associated.
Right. And is there a scope to take, say, something like a Lakme Academy global, or say Mac, something like Mac or Arena, which are largely India focused as of now? Is there a possibility to take these global?
So we have already started on that. We've opened our first center of Mac in Vietnam is doing very, very well. In fact, last year, the system-wide collection, Anuj, if I remember correctly, has crossed $250,000.
That's right.
Right? And we are opening our second center of Mac in Vietnam. Arena, we are already present in, I think, about 6 countries. We're looking at expanding the footprint on that. And on Lakme, the challenge that we have with Lakme is that
this correction, Arena is in
12 countries. Thank you. Thanks for that. The challenge with Lakme is that, by the skin type and hair type, you're basically bound to South Asian and some Mediterranean countries. You miss out on the Scandinavian and African and Oriental countries because it doesn't these products don't go there. So Anuj and his team would obviously be looking at what we can do with our expertise in India to expand the Lakme brand in the countries that we operate in, and obviously look at other opportunities in places where Lakme is not a right fit.
Right. Thanks. That was quite detailed. And if you could also basically answer the second question in terms of what are the growth plans for some of our nascent businesses like aviation and preschool.
Anuj. I said Anuj would take.
Yeah. So if you look at aviation as a sector, aviation sector obviously in the pandemic, both the sectors that you mentioned obviously were the worst hit. That does not need any elaboration. The preschool business has remained closed since the first lockdown. While that's sad in its own sense, because these are the first 2 years, that particular age will never come back for those children, so they have missed out on various developmental goals because it's a very sensitive age for a child. But having said that, within those constraints, we have even during the pandemic period worked on different pedagogies and validated those pedagogies as to for achieving similar or good enough developmental goals for the children. There is all about meeting the developmental goals of the children. It's not as much about generating customers. So if you look at, for example, we have used augmented reality in a very big way to engage the child in a very realistic scenario. So today, the so-called teaching tools that we have are augmented features, and these are all digital native children who quickly adapt to technologies. So we have tried to use age-specific technologies. Now, how does this look going forward? A lot will depend upon the pandemic as to whether physical schools get reopened, and if they get reopened, with what constraints, what safeguards, etc. But your guess is as good as mine. But if you ask my guess, that I think the worst is over. Anil mentioned that. And if I look at the Maharashtra government circular, which was issued, I think 2 or 3 days back, they allowed preschools to be open. So the trend is positive. Once they get back, then we will be back on a good path for those things, and we'll reinstate all that we have lost in this business. Coming to the aviation business has done reasonably well. Again, despite the pandemic, the tailwinds are growing in its favor. If you look at flights, they are full. If you look at the number of airports that are getting set up in the country, just for your information, our students are more employable not as cabin crew. If in case you carry that perception, they get more employed as in the airports and in customer interface roles. So the growth of that has been very good, and even if you look at any secondary data, you will find that the employment potential is increasing every day. Yes, it is prone to humps, like both in perception terms and like it happened in the case of Kingfisher. Although in realistic terms, when Kingfisher closed down, the perception around the sector was impacted, although the number of jobs that our students were getting were not. So we are prone to perception changes as well as real changes like the pandemic. So as a strategy, what we have done is that we have broadened the course basket in aviation sector to include all customer interface skills. So for example, what we teach in the courses is not very different for an airline as opposed to, let's say, in hospitality sector or a hotel sector or any sector which requires a customer interface role to be played. So with that enlarged employment basket, I think about the medium term we have de-risked ourselves fairly well, and we would stand to gain from that de-risking, thereby opening up more potential employers for our students.
Right. Thanks for the detailed answers, and look forward to some exciting times going ahead.
Thank you, Sunny. Sir, Mr. Pawan Parekh has posted a message on the chat. I'll read out the question. Lakme has been a great success for us. Are we looking to add more such verticals either through organic or inorganic manner?
Okay, the very short answer, Siddharth, is yes. Okay, and very short answer, yes. Unfortunately, it would account as a, we're talking to multiple people for various businesses. Okay, we can't share that because it is price sensitive information, and as and when something comes up, we will inform the exchanges of that appropriately. But yes, there are multiple discussions going on.
Right, sir. Point taken. I'm just checking if there are any hands raised as of now. In case you have any questions.
I have questions. Can I go ahead?
Yeah, Urmil, please go ahead.
Yeah. Anil sir, basically this is more strategic and at the industry level sort of. So we've seen Microsoft becoming, taking a punt at the gaming industry. And, IT services are seeing a lot of work as regards user and employee experience, which does converge a bit on, if not directly on gaming, but on the digital side. So do you see opportunities for, our courses in the, a much broader application than what it was earlier? And does that, and you mentioned that, the jobs are more than the, supply which you are able to provide. If not absolutely in the near term, maybe 2-3 years down the line, does that provide companies like us pricing power? Might not be only for the existing course, but by adding more value, you being able to enhance the revenue per course?
So the answer is absolutely yes. If you so let me give you an example here, and my favorite example is that of engineering. Today, a person who does an engineering program spends 4 years, spends about 10 lakh rupees, and about 26%, between 25 and 30% of the people get jobs, and the average salary for an engineer is still sub 4 lakhs per annum. So on a 10 lakh investment, 4 years time, 4 lakh rupees per year salary, you're talking about a return on investment of 0.4. Now you compare this with my programs. My programs today are priced at 1 lakh rupees on an average per year, and the average salary that my students get is between 3.5 and 4 lakhs per annum. So if you look at the return that I give them, it's between 3.5 and 4, which is almost about anywhere between 8 and 10x better than what an engineering student gets. When I compare even the career prospects for my students, they are as good as for any engineer. So for example, a person with 10 years experience in media and entertainment would be in that 18 to 25 lakh salary range in animation, VFX and gaming. Similar would be the price range for a project manager in the IT space. What we pride ourselves on is not being predatory in terms of our pricing. Today, because I'm giving a 3.5 to 4x return, I can easily double the course fees and still probably get students. But the idea is never to make it predatory, but to make it affordable for everybody. And if we were to go the way of doubling our price or tripling our price, it is still a great value proposition. But we would miss out on the thousands of youngsters who cannot afford to pay those 2 lakh, 3 lakh rupees fees to join these programs. Now, what happens typically is that these kids join as invariably what happens is that when a poor child joins a program, they take a course, they select the lowest value course of maybe 25,000-30,000 rupees, get a job which gives them maybe 8,000 to 10,000 rupees while studying this. Once they start earning, they come back and join the more comprehensive programs. We will continue to be like this as a company. And where we are investing big time, Urmil, is in terms of actually trying to educate the masses that there are great career opportunities here. Now, the problem that we have is that, like Anuj rightly said, the number of jobs and the number of recruiters is far more than we can service today. So we have almost 2,300 plus recruiters, who want to hire from us. They are listed with us. I mean, there's no way we are able to give students to everybody. So the hope is that with the continued investments in marketing that we are making, we will be able to get this number of 35,000-40,000 students, to maybe 2 times, 3 times the number that we have as early as possible. I mean, today if I had 100,000 students, I would be able to place them with them. It's that simple.
Wow. Sure. Sir, and does the change in the arrangement wherein we would be invoicing the students directly enable in 2 things? One is enhancement of the course as well as then the value that we charge?
More than the value, it is that we explained the reasons. It's control over the network, it's control over delinquency, it's smoothening the revenue and profit curve, it is increasing the engagement level with students. Ravi rightly said that, as we become larger, that we have to keep looking at all the compliances in a very serious way. So GST compliance, I think Ravi is worried that, if some of your franchisees default, Ravi, they could be coming behind you, right? The tax.
I would not be entitled to input credit immediately.
Yep. Yeah. So we have to. So these are various reasons. I mean, what I want to reassure everybody is that our intention is not to artificially inflate our number.
Absolutely.
Okay. I mean, the fact is that it makes sense for us, and it will give you a much better idea of what our size is once we actually get to this. And you will see, today even maybe the 2%, 2.5% of leakage that is there in the system, that will get completely eliminated, right? So these are the reasons why we've done this. And we've been very transparent about it. I mean, we've carried this as a sort of note in our accounts. And this is the first quarter when the numbers have been significant. And we've gone out of our way to make a presentation on this to explain that, look, this, it should not have been 6.5. It should not have been this much higher. This is a comparable number. We've even shown that in the deck.
Yeah. So my question was actually, when we announce the program, when we improve it over the next 2 to 3 years, as we always have to do it, with the announcement, does increasing the value of the course, help in the new engagement?
Absolutely, it does. See,
My question is more on that, sir.
so let me tell you one more thing, Urmil. I mean, today, I would actually like Anuj to talk about it. Anuj, you've got a few hundred faculty who have already been trained on the metaverse, right? I mean, why don't you just share that with the investor group? I know we don't have a slide on our deck, but I think you should share that because that's very relevant. I mean, we intend to start programs on this in the next few quarters. Would you?
Yeah. Before I dive down into training, I think let me add one more point to the answer that you gave to Urmil. Where does it help us? It gives us more flexibility because once the student is with us and in the choice of the delivery model, we could, for example, theoretically speaking, introduce a 30-hour course, let's say a 20-hour module in a 300-hour module, with the rest being done by the franchisee, because for these 20 hours, the franchisee will never get the right faculty. And I'm able to aggregate all the franchisee student centers across the different centers into a central pool for those 20 hours of that course. And here is where I will give metaverse as an example. Already we have trained all our, with the help of Epic Games, we have already trained our people in various gaming technologies and the concept of the metaverse. And we have very robust plans which we are drawing up under the various opportunities which the metaverse will throw up in the next 1 to 3 years time frame and even longer. But right now we are looking at what are the opportunities in the 1 to 3 year time frame which are very real and around the corner. Yes, there will always be continuous debates on the hype versus substance, but we leave that debate for another forum. But the crucial part for us is for us to be able to capitalize on the hype itself, even if I assume that it is a hype, then the perception, we are one of the early birds in this whole game of being in this space. And this is this has been one of our strengths. Please look at our long-term history. Our long-term history has been riding waves. Let's say Arena was at one time called Arena Multimedia, and we were by far the biggest in the space. And then only multimedia was the technology dominating it. Then in the early 2000s, animation started becoming big. So we added animation to it. So we became multimedia and animation. Then cut to late around 2010s and the early 10s, VFX started coming in a bigger way. So we added VFX as a domain. So it became multimedia, animation, VFX. Now gaming has come in. So now it's animation, multimedia, animation, VFX, and gaming. Multiverse, XYZ will go on coming in, and we already have 3 or 5 in our minds which are working on, very actively working on, I will put it, to add to the whole dimension. Now, a person learning multimedia has nothing to do with a person learning gaming. Okay, absolutely nothing. But in the sense that these are all separate markets which go on opening up once you are in that space. So this is another growth vector for us, which is newer domains in the media and entertainment space, and certainly metaverse is one of them.
Sure, sir. That was
another important this thing is that we've got almost about 500,000 alumni between Arena and MAC over the last 20 odd years. Now, some of them, they want actually to upskill. People who've probably gone out 3 years, 4 years back, or maybe 6, 7 years back in multimedia. They come back to us on animation, VFX, gaming. Gaming is just exploding. And so are our numbers on that. Now, I mean, in the coming year, we intend to invest very heavily on gaming. Whether it is course development, whether it is building center capability, whether it is getting student engagement on that, training our faculty, creating a solid pipeline for gaming jobs. So it's very interesting times that we are living in.
Sure, sir. That was very detailed. And just my last question. So In the last quarterly call, we mentioned, Pro Ali taking about 2 to 3 quarters for getting more courses on board. Just an update on that would be helpful.
Yeah,
And
so-
is there any refresh or
Absolutely.
addition?
So in this quarter, we expect to launch at least north of 10 more courses. Okay. I'm very happy to share that the engagement is really doing well on Pro Ali. I mean, we've crossed, I think, about 300 odd paying customers. We have thousands of people who are interacting, literally playing with Pro Ali on a daily basis. I mean, it's not even thousands, running into tens of thousands. So it's doing very well, much better than what I expected. And hopefully, as we keep on adding courses, the engagement with people will keep increasing, the conversions will keep increasing, and it will become a significant delivery platform for us.
Sure, sir. Thank you so much.
But it's doing very well, and the feedback that we get from our users, I mean, the team in Pro Ali is doing a wonderful job of connecting with the people who are using it. You can go to the Pro Ali platform. You will already find testimonials from users on, how they benefited from this. So, like I said, we are not in the valuation game. We are in the game of creating a valuable business. How the market views it, I leave it to the market.
Right, sir. Yeah. Siddharth?
Yeah, right. Do we have any more questions from participants? You may unmute yourself and ask your question in case you have a question.
Yes, thank you. This is Nitin again. What is the split of business that you have between India and outside India, and any new markets that you intend to explore? Could you also give some color or some flavor on the quantum of business that you might have lost because of the pandemic or the lockdown in this quarter, and what are the major markets which might have been impacted on account of it?
Would you like to take that?
Yeah, sure. The first part of the question, I'll repeat, it's in the deck. Saurabh, while I'm talking on the second part, if you allow the...
So I'll just mention the numbers, then you can answer. So out of the 37 crores in this quarter from global retail, so 29.5 is from India, and roughly 7.5 is from the international markets.
Yeah. Now, the second part of the question is the effect of the pandemic. I think the effect can only be determined from where. If you're looking at what we were pre-COVID, as we mentioned, we are already back there as far as the lead indicator of booking is concerned. As far as collections are concerned, the collections is a accumulation of collecting from the fresh students as well as collection from the previous year students. So in the previous year, certainly our booking was lower during the lockdown periods, and therefore the carry forwards of those have started catching up as the students have started almost being back to business, whether physically or digitally has stopped mattering to us. For example, just when the third wave hit, it was we didn't even blink. As opposed to when the first lockdown happened, we had to reinvent the whole processes, and we had to issue new modules, new processes, new controls. Everything was new. But by the time the second wave came, and we had already centers were very used to doing what they were doing, and the third wave was we didn't even blink really. So students are now coming and going. Now, another way of asking the same question is from what could have been. One is to look at where we were. Other is what could have been. Yes, if you're looking at it from where could have been, we were on a high growth trajectory. We are not at the same high growth trajectory. But as the students have got more accustomed to this blended form of learning, we expect that also to go away. See, for example, we used to get a lot of students from outstation coming to the nearest town to study. So that trend has caught on only in the October to third wave was October-November period. We found a lot of them coming back. The third wave could have impacted that a little bit. of the people who come from, let's say, Unnao to study in Lucknow, or to people who coming from Meerut to study in Delhi, and so on and so forth. Or a Sholapur guy coming to Pune or Bombay. So that set of students are still have a little hesitancy, and those people are preferring to do full-time online, remote. When I say online, I mean remote live delivery. But it is integrated into the same course at the same price level. There's no change in the price level.
Saurabh, if you could actually also share the growth path that we were on was significantly higher than where we are today. And the moment I think it reverts to normalcy, we should get back there very quickly.
Yeah, I'll just show that slide of the presentation, Anil. Yeah, I'll share my screen. Yeah, just a second. Yeah. Yeah, can you see the slide?
I can see it. Thank you. Thank you.
Yeah. So, this is the pre-COVID trend in booking and collection. If you see, the trend was continuously, increasing. This is a quarterly chart.
The wave is the clear, also brings out the clear seasonality in the business.
Correct.
And the seasonality, while it remains in the collection graph wave, you will see the amplitude has reduced because of the previous year's collection also comes in the following year. So while the wave remains from the fresh, the wave gets dampened because of previous year's collections coming in. You guys are better at reading these things. I shouldn't be able to tell you guys this. So
this is what you wanted to show, right, Anil?
Yeah. So now, if you were to see that the trend which was upwards, if in the 2-year interregnum, it ought to have covered. The consistency would have taken it higher, and we are really at the previous level. So to that much, you can give the impact of the COVID to that delta. Did I answer your question, sir?
Sure, I think it's quite elaborate answer. So thank you for that. Just one last part of the question I had was, any further new markets that you are planning to explore, or would you want to do it once the pandemic is over and the normality?
No, I didn't answer the question from an international perspective. I think that is also relevant to some degree. See, our biggest market outside India is Vietnam. And Vietnam had a very different trajectory of COVID as compared to India. Vietnam, in the first year when we were massively impacted, Vietnam's story was very different. In fact, they grew leaps and bounds. They did an excellent job of controlling COVID. And therefore, while there was a psychological impact, there was a fear impact, but business impact was minimal. The story reversed for them in the second year. When we were less impacted, they were like completely blown away by COVID. So that they got impacted much more in the second year than in the first year. Now, that way, each individual country has its own waves and own this thing, because so the impact was little different across each geography. Now, coming to the question on new geographies, I think the value proposition remains completely intact. If at all, it's grown. And therefore, we have added several countries in Africa, even during this for example, DRC, the Democratic Republic of Congo, we have added, Honduras, we have added, many countries we have added in the even during the pandemic period. So that's an ongoing process of evaluation, finding the right partner, finding the right value proposition for the country, and there is no change in that process. Absolutely.
So thank you for that, I think, and wish you all the best for the future. Thank you.
Thank you.
Do we have any more questions? Sir, I guess I'm not able to see any. I'm not able to see any hands raised. Urmil, can you see any hands raised? No.
Siddharth, if we
Okay.
can, in that
Yeah.
case, close the call.
Yeah. So, sir, I would like to thank Dr. Anil Pant, Dr. Anuj Kakkar, Mr. Ravi Shankar, and Saurabh for another insightful session on Aptech and its growth prospects, and also to my colleagues and all the participants of today's call. Trust me, sir, it was indeed a huge learning experience for us today, and we go back more convinced on Aptech's robust future. Thanks a lot, and greetings for a wonderful 2022 to all of you.
Thank you, Siddharth. And your presentation will be up on our site, and
Yeah.
all those nice videos which we have not played today, people can actually log in and see all of that stuff. I mean, every
Yeah.
quarter we promise to bring something new,
Yeah.
a new story.
Yeah.
Thanks.
Sure. Thank you very much.
Thank you, Siddharth.
Thank you.
Thank you, everyone.